Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. I'm very pleased to introduce a new guest today. We're very blessed to have Doomberg from the publication Doomberg on the channel. And today we're going to be talking about all of the whirlwind of news that has been geopolitics and financial markets since January this year. Doomberg, thank you so much for joining me today. It's a pleasure to have you on the channel.
Oh, it's my pleasure to be here. Looking forward to a fantastic discussion.
I'm sure it shall be. Let's dive straight into it. It seems like every day you wake up to a pinball effect of news, particularly from your side of the world. There's a new sheriff back in town and certainly is making waves in terms of policies. I'd like to talk about some themes through that lens with the new Trump administration and what that may mean over the next 4 years and beyond and how much one man or one administration can administer an economy, in inverted commas, versus some of the arithmetic. So I have two grandparent themes, and one is that we're entering into a period of higher, more volatile inflation, and that is mainly due to the US fiscal situation. So Donald Trump, on the one hand, seems to be wanting to stimulate the economy through loosening, deregulation, all these type of things. Has promised some tax cuts, and yet anyone who's looked at the arithmetic behind the situation in the US debt schedule should be a little bit nervous, particularly this year, where a lot of that starts to come into maturity. How do you see the coming rolling over of US debt in the light of some of the administration promises?
Yeah, it's an interesting question, and it's a very difficult one to model. It's a classic sort of flow problem. If you only look at some of the flows, you net out a different answer than if you try to look at the problem more holistically. It is popular opinion that the U.S. is on the verge of bankruptcy, that its fiscal situation is irreversible. We're not so sure. We probably have a contrarian view for a couple of reasons. One, there's a massive amount of waste in the U.S. federal expenditures that I think, for all of his varying attributes, Elon Musk and his Doge team seem to be well on their way to both identifying and then publicizing. And there's nothing like the disinfectant nature of sunshine to scare away all of the cockroaches. A couple of trillion of the U.S. fiscal deficit situation has really just arisen in the post-COVID era. And the vast majority of that, we think, could be cut with no real noticeable difference except for the people no longer receiving a paycheck or grifters no longer stealing from the public treasury. And it wouldn't take much in the way of real meaty reform for the markets to gain confidence that the U.S. Fiscal situation is solvable, which would, I think, immediately make long-term investors more willing to step up and help finance the wave of short-term treasuries coming due and whatever fiscal deficit remains by the time they're done taking the Malay chainsaw to the federal government. Look, it is a huge blob of waste and mismanagement and theft and graft. And not only does Musk know how to cut such things based on his entree into the Twitter headquarters famously while carrying a sink, he also has the platform, Twitter, which is what I'll always call it, to highlight the chicanery that's been going on and all of the waste and mismanagement to the point where I think Trump is going to clobber his political opponents, i.e. the Democrats and the Washington, D.C. elite, over the head routinely. That's one thing. The second, though, which is not said often enough, the U.S. is nowhere near bankrupt. The balance sheet of the U.S. federal government does not include anywhere near the totality of its assets. There's a huge amount of assets that simply aren't on the books. Just give you one small example. President Biden, through executive action, dubious executive action, we would say just as dubious as many of the things Trump is doing, by the way, legally dubious. But nonetheless, as it currently stands, 200 miles of basically, if you draw a circle around all of the United States and then go out 200 miles, that most of that area is now quote unquote off limits for energy development, natural gas and oil drilling. What's the value of the integral of those leases if we got serious about taking full advantage and monetizing the country's vast resources? Um, so there's a lot of sort of clickbaity, scary type things that you see, and certainly there's an issue. The massive amount of waste is an issue. There's another issue, which is the federal government is 25% of GDP, and if you cut it too hard too quickly, you will probably trigger a recession, which is not something on Trump's radar. And the last point I would say is that the U.S. is a global energy gigapower. We produce 20% of the world's oil, 27, 28% of the world's natural gas. We have the highest number of operating nuclear reactors, at least for now. We have the world's largest coal reserves, even if we don't use them that much anymore. Um, there's no scenario where the U.S. is going to be broke. It might be a little more expensive for us to roll over some paper, but in the long run, the U.S. is still the cleanest dirty shirt in the closet, and I think will be mostly fine. Although the friction of the transition, as the Trump administration has proven in the first couple of weeks, will certainly be at a minimum interesting to watch, which is bullish if you're in the newsletter business like us.
Certainly. And whilst that paper does seem to be rolling over at much higher interest rates, and you have deficit on track to be 7% of GDP by 2034. Now, obviously, if you get some growth on the productivity side, that will help reduce that as a percentage. And if the Doge, the Department of Government Efficiency, can make some inroads there, that may be able to bring it down. And we're also kind of at the highest point since post World War II in terms of interest outlays on the debt. And we've seen this being reflected in the gold market recently. So you've mentioned that the US and undoubtedly is the cleanest shirt in the laundry basket. However, when it's measured against the gold price recently, we've seen gold prices being run up in all currencies and just recently hit a new all-time high in US dollar denominated terms. Is it likely to be the case that the US currency will outperform other currencies as measured by the DXY, but will probably continue to fall behind in terms of gold? How do you see gold entering the chat and perhaps Bitcoin as a new form of money?
Yeah, so two parts to that question. So I'll handle them separately. You are correct in identifying that the US dollar strength against other currencies is often measured against the DXY index, which in reality is nothing more than, or not much more than the euro, the yen, and the pound. And these are three currencies themselves undergoing significant debasement with all manner of fiscal challenges on the home front. And so it's really not an excellent measure of quote unquote US dollar strength, at least as it pertains to purchasing power of the average American citizen. We do believe gold is a far superior measure of debasement. We just wrote a piece on this called the Frankfurter Index, which was kind of a fun one to put together. Trump needs a much weaker US dollar in order to catalyze the manufacturing renaissance that both he and we think the Department of Defense are are advocating for. The U.S. for too long, listening to the Wall Street slash intelligence community, outsourced, hollowed out its manufacturing base, much of which fed its national defense supply chains to China. And China now, as we like to call them, half jokingly or cheekily, China is now the new arsenal of democracy because all of the Western militaries rely on China for so much of their critical goods and metals and rare earths and batteries and pick your favorite, technology of the day. And Trump, to his credit, Trump is an interesting character. He's obviously a extremely forceful personality, a man of exceptional persistence. He's also quite easy to read. He has a lot of bluster. There's a lot of tells in his bluster. It's not a difficult man to comprehend, and he often gets the sort of the EQ part of the story correct. Like he has a feel for where things need to go, and that's why he resonates, by the way, with so many people in the working class. Because unlike virtually any politician of this generation, he, as unlikely as it sounds, he connects with the working class exceptionally well because he speaks to their problems in a language that is familiar to them. And so he needs the dollar to be much weaker. We're bullish gold in the sense that we would like to save the purchasing power of whatever wealth we have been able to accumulate thus far. And I think between that and the politicization of the U.S. Treasuries, which are no longer neutral reserve assets, relatively bullish for gold. All of this, of course, is predicated or depends upon the manner in which the war in Ukraine winds down and how NATO responds to its defeat on the battlefield, which could throw many of the assumptions I've just laid out, up in the air. But all things being equal, we would be bearish the U.S. dollar because we think the price of gold is fixed, i.e., it's just measured in ounces, not dollars. And so the amount of gold that a dollar will buy in the future will go down. That is our view. Of course, nothing's on a straight line, and we could see significant volatility. But and then last point on Bitcoin, there's a lot of overlap in the Venn diagram of people who buy Bitcoin and people who buy gold, and the reasons they do so. We're not in the Bitcoin camp. We're happy to observe it. It just doesn't have a long enough track record for us, and it's too volatile for us to serve as a store of value.
Fair enough. Before moving on to the energy segue, I'd like you to delve in a little bit more about the manner in which the war in Ukraine is resolved. What do you mean by that in terms of ramifications? And do you have any particular ideas on how that conflict may be resolved?
Yeah, we've given a lot of thought to this. It's probably something we're going to put together a pro tier webinar on. We have done so in the past. We rewrote and presented a webinar to our pro tier subscribers called Geopolitics and War, Sleepwalking into the Abyss. And this was a year ago that we wrote. I would say history will judge the Biden administration's foray into Ukraine as a catastrophic blunder. And it will be devastating for Europe in particular. It's quite clear to us that Trump really doesn't want to have anything to do with the war in Ukraine. He'd be more than happy to wash his hands of it and leave it for Europe to manage. He's not the type to accept the loss, though. So there's that sort of counterbalancing force. He would like to be seen as winning because Trump likes his numbers to go up, and he's, tough guy and big chested and all that jazz. And so he's in a bit of a dilemma because he basically has no leverage. Biden left him with an empty hand. We have no more weapons to give. The political support to send more money has evaporated. There are calls for an audit of where all of the money that has been sent to Ukraine went. If that string gets pulled upon, and it does seem like that's a task for Musk and his crew of young, ambitious, 80-hour-a-week, 120-hour-a-week type Silicon Valley interns, that could lead to the end of many careers in Washington and the arrest of some people, in our view. The biggest losers in the war in Ukraine, of course, has been the people of Ukraine. And I read with great interest Marco Rubio, Secretary of State Marco Rubio's recent interview, where he said we basically sold the people of Ukraine a big lie, which was that not only could you sort of stare down Russia, but you could defeat them. And it was very clear from the beginning that that was never going to happen absent nuclear escalation, which Biden correctly, thankfully, seemed hesitant to implement. And so NATO has lost the war in Ukraine. Russia has seen invaders over the centuries and has stared them all down. They're a giant economy. They have an endless amount of critical commodities. They have a sophisticated manufacturing supply chain. They're a strong country. I don't know when it is in modern U.S. history that we forgot those axioms of geopolitical analysis. But the losers after Ukraine, of course, which is far and away the biggest loser, the next biggest loser on the board is Germany, and then Brussels, the UK, and much depends on what Putin decides to do and how he plans to handle his imminent victory. These are probably going to sound like somewhat controversial statements to at least some of your audience, but I just think objectively, and we have been studying the war objectively for the better part of the last 18 months, just given the nature of what it is that we do for a living now. And we've long been concerned about how NATO would accept defeat. There was a scenario where escalation and nuclear exchange was on the table. Trump certainly doesn't want that. And I think Trump is retreating back to sort of a version of the Monroe Doctrine. He's going to take care of the Western Hemisphere and set up shop there and let Europe handle Ukraine, and China and Russia and the U.S. will be sort of the new multipolar powers that divide up the spheres of influence, a term that is now making a comeback in their own favors.
Yeah, I see recently President Zelensky saying that he received $100 million somehow went missing between some of the aid package that was supposed to
Billion, yeah,
arrive.
100 billion. If it were
100
only
billion.
100
Yeah,
million, yeah, we'd have a lot less issues.
yeah, that's true. So I misspoke. 100 million. Just lost track of a few zeros these days.
Yeah.
That's interesting you say that because my understanding is that one of Kissinger's great genius was to keep Russia and China kind of separate, and the US kind of made improved relationship with Russia post 60s in order to kind of prevent those two guys siding together at the poker table. Is there a way back from the US now, having, I suppose, in one way, kind of pushed Russia into China's arms, and obviously China's interested in natural resources, and now you've just given them an unlikely but appropriate ally. Is there a way
Oh,
for the
I
US to turn this around?
that is one of the biggest catastrophes of this whole adventure, is that we have driven the two. The great geopolitical objective was to, as you mentioned, never allow Russia and China to become strong and authentic allies because the combination is a far more formidable force than what the US and its allies can muster. I mean, it just is. And we've done that. And so we have to accept that defeat. I don't think we're in any position, for example, to say or do anything about what China decides to do with respect to the Taiwan question. We're so stretched and so depleted and so war weary, frankly. I think there is no appetite across the average voters in the US. The average voter in the US has no idea where Ukraine is on the map or what we're doing there. And so hundreds of billions of dollars, a lot of it wasted, hundreds of thousands on both sides of frankly innocent people. I mean, soldiers are the children of parents and the spouses and the siblings and the cousins. These are people dying basically on the doorstep of Europe for what? The Donbass? Like what? How is the Donbass in the strategic interest of the United States? It was really honestly, I think history would be extremely harsh on the Biden administration and the current crop, at least the remnants of the current crop of the neoconservative slash rules-based international order type leaders across Europe, the Ursula von der Leyens and the Olaf Scholzes of the world, who I think have just done well, they would of course cast all of this very differently, countering Russian aggression as though nothing happened between 2014 and 2022 that might have provoked this situation. But nonetheless, the passage of time will clarify what really went down and who is culpable for what can only be described as a calamity.
Yeah, indeed, it is. In terms of repairing the situation with Russian natural gas making its way to mainland Europe and the UK, how do you see that playing out now? We've had obviously Nord Stream 2, I believe was the one that's now out of action, shall we say. And we saw, particularly around 2022, uh, Dutch TTF futures just kind of dislocated from the rest of the natural gas market. Do you think that there'll be new pipelines um, opened up and kind of go back to how things were? Or do you see it really as everyone's going all in with US cheap natural gas, building LNG terminals, and that'll be Europe's main supplier moving into the future?
Well, there's no such thing as cheap LNG, of course. U.S. natural gas in the continental sort of confines of the United States is cheap because it's here and it's trapped. Once you chill it and put it on a boat, it's now part of the global, as you say, Dutch TTF, JKM contract in Asia, um, that sort of fleet. That we did a whole presentation on this last month by coincidence called, Gas Wars. Um, the thing that people in the West don't understand is China consumes most of the gas that it produces domestically. Three-quarters of the gas it produced in 2023 was consumed domestically. It exports some. Those exports matter way more to Europe than they do to Russia. And this whole sanctioning Russian energy, which we called from the very beginning, we wrote a very critical piece in April of 2022 called Crazy Pills, where we talked about how this was designed to backfire. It was foolish. It was insane. And so that's the first thing. Russia consumes most of its own gas and doesn't really need the exports. Europe needs Russian exports way more than Russia needs to export them, especially Germany, by the way, which produces almost none of its natural gas. And so, at the beginning of the war, when all four pipelines of Nord Stream 1 and 2 were still intact, the sort of total capacity to move natural gas from Russia to Europe via pipeline was about 22 BCF per day. Three of the four Nord Stream pipelines have been destroyed. One remains operational. And so what you have left now is about 14 BCF per day, and of which five or so is still flowing through Turk Stream and Blue Stream under the Black Sea to Turkey and then finding its way into Europe. And so, um, there's potential there in a world where peace is achieved and faces are saved, and Putin and Trump can both declare victory to their own folks. There's a lot of potential for sure, but it just seems like difficult to get from here to there. There's a couple of real risks, for example. One is Russia just may decide they don't want to do this anymore. And in fact, we quoted in this presentation a fascinating statement from Vladimir Putin, which, by the way, the West never actually listens to what Putin actually says, which is kind of like an amazing thing in itself. So on the day after Christmas, our Christmas, Putin said about Ukraine cutting off the last of the natural gas, flowing over pipelines to Europe. While you have made your bed, now lie in it, live without our gas. I mean, the first risk is that Putin just decides doesn't need the headache. And by the way, I mean, Europe and the US have gone on a lawfare campaign against Gazprom, which would have to all be undone before any of this could get restarted. The other risk is that there's more sabotage. The existing pipelines could be blown up. There's been several attempts by mysterious characters to blow up Turk Stream and Blue Stream in the Black Sea. And I wouldn't be surprised if we see, the pipeline going through Poland, for example, might suddenly become the victim of a terrorist attack, because it's certainly not in Poland's interest for cheap gas to flow from Russia to Germany. There's all manner of risks. And then the third is China just takes up the slack and they build the Power of Siberia 2 to the Yamal gas fields, and a big chunk of the molecules that used to flow to Europe now are permanently redirected towards China. So it's not clear to me that Europe will just be able to say, oh, well, our fault, our bad, let's go back to the way it was and buy cheap, steady, reliable natural gas from Russia. There's a lot of anger inside of Russia. Look, one of the things I try to do is read the propaganda inside all of these countries, Ukraine, Russia, France, the UK, the US, because once you read what people are telling themselves, it's actually an interesting input into what's possible. And there's a very high degree of anger in Russia at the Europeans for what has occurred, and working through that will require some skill.
Indeed, it will. It seems that any way you look at it, natural gas is going to remain higher for longer, at least the way that I interpret the situation. One thing that is a relatively new source of demand in terms of the public domain is obviously AI data centers in the US. Those long term perhaps going to have some nuclear power, but it's going to take a while for us to get to that point, is my understanding. How do you see the current demand for gas in the US, purely for electric consumption, adding into this new factor, AI data centers, which use an enormous amount of electric power? And then we could talk about DeepSeek.
Yeah, so this is a topic that has been of great interest to us for some time. And our view, which we had sort of predicted several months ago, was that natural gas in the US would be used to power data centers off grid. One of the big challenges with operating data centers in the current Western world, as our grids are designed, is that there's just no capacity for growth. We can't get transmission lines built. We can't get permits. There's all manner of challenges. The U.S. has one huge advantage over Europe in this regard, which is, stuff that doesn't leave state borders can be managed by the state and doesn't typically require federal approval. And so states like Texas can become global energy gigapowers, and that's what they've done. And so our belief is that much of this demand is going to be met offline. So you'll have pipelines of natural gas going into a giant building and data coming out the other. And this resolves an enormous amount of barriers, such as, getting grid connections and all the other challenges that come with expanding the grid as opposed to just making bespoke power centers that feed things like this directly. And so that is the way we're going. And in order to do that, you need a bunch of things. And frankly, only the US and China have those things at the scale at which they're needed to truly power these data centers. That is abundant, cheap energy. We as in I live in the US. The US has, there's a wash in natural gas. There's so much natural gas here that sometimes have to pay people to take it. And China is the world's largest producer of coal electricity, and they've been stockpiling mountains of it and still importing, even though they're burning less than they're producing domestically. Some view that as stockpiling for war. We happen to view it as a rational response to the energy crisis of 21, 22. But either way, they can power their own data centers with the combination of nuclear and the massive fleet of nuclear reactors they're building out. No European country can compete with any of that. And so those are the two sort of AI gigapowers on the board. And as we see with, DeepSeek and other advances, which is why we've been chronicling the chip wars for as long as we have. It's going to be it's going to be China and the US leading this race, and then we'll see who ultimately wins it.
Indeed. You mentioned Texas. That's of great interest to me. I have a large focus in particularly Texas due to the way that it's structured and some of the laws of the land of the state of Texas that you just simply don't have anywhere else, particularly with regards to water that will most likely be needed to cool these data centers. I haven't seen any of your publications that focus around water. Maybe I just missed them. Do you have a strong view on how it's going to be, on how that water may be a bottleneck to cooling these data centers? I'd be fascinated to get your take.
No, we don't see that as a significant constraint because there's mountains or oceans of produced water that is coming up with oil and gas, particularly in the Permian, and some clever chemist and engineer will figure out a way to make use of that for cooling purposes. In our view, I mean, the amount of water that comes up per barrel of oil is A, very large, and B, growing as the fields and wells get older. And what to do with that produced water has been a great driving force of innovation and development in the Permian. And so they'd be more than happy to do something productive with it. And so we don't think that's really going to be a problem. And then, of course, we just noted with some interest Chevron coming out recently saying they're going to do exactly what we said that the industry would have to do, which is build purpose-built power plants to feed these data centers. And so there's so much natural gas and produced water in the region that it just is a drop in, I think. But this way, the size of the prize and the cheapness of the fuel make such barriers easily overcome.
Indeed. So companies such as ARIS Water Solutions, LandBridge, Texas Pacific would likely be beneficiaries into increased
Yeah, so
CapEx around that area.
any business that is scaled with volume or services, right? I mean, it's like volume of production and not price. Oil field services, midstream, the types of companies that you just described, yeah, they would have no shortage of work to do for a very long time. And by the way, the value of that electricity to the data centers is much higher than it is for the average public. The public good of the grid. Part of the reasons why it's a quote, the good part of it being public is that it's cheap and abundant and reliable for everybody, much cheaper than it's worth to most people, certainly much cheaper than it's worth to the marginal buyer, which is why it has to be done off grid. And that's why we are, in the long run, all things being equal, relatively bullish natural gas, with one important caveat is where you have an infinite supply of it and the producers don't have a glorious track record of discipline when prices begin to escalate.
Indeed, it is. Can you comment around how that's going to work? So consumers, obviously, they're not going to be super keen to pay more for their electricity, but with these data centers paying well over and above for these kilowatts, how is that going to be managed? Are they going to put caps on consumer utility companies and what they can charge? I just have confusion around how exactly that's going to
Yeah.
pan out into the future.
So maybe I wasn't clear. These will be off grid.
Okay.
So you imagine setting up shop in the Permian, which has free or negative natural gas today. That won't be that way, of course, once you soak up the demand. But natural gas prices in the Permian don't really affect natural gas prices in the Midwest. And that grid is separate from the Texas grid, even if it were connected to the Texas grid, which it won't be. So you will have isolated pods where natural gas goes in one side and data comes out the other, and no connectivity to the grid whatsoever. And since there's so much natural gas, you could do this in the Permian, you could do it in Appalachia, you could do it in Alberta and British Columbia, which has the added advantage of it being much colder there. And you wouldn't really have to interfere with the existing grid itself. And so that's what we think the future is. And if you perturb the regional price of natural gas, you're not really perturbing the national price of electricity to the extent that natural gas is one of the fuels that powers our grid. And so, alongside coal and hydroelectricity and some renewables and oil in the U.S. Northeast, which is a whole other scandal in its own right. But in our view, the fact that we can't allow the marginal buyer, i.e. data centers, to affect the price of electricity for everybody is the driving force that moves all of this off grid.
Got it. Very interesting. While we're in the Permian, I hear lots of noise and rumblings around eventually the Permian is going to roll over, and in terms of its growth in production. How do you see that play out? Or do you think it's just a case of economics will drive more development? I mean, it seems to be two camps. That some camps think that geology will trump CAPEX, and there can be an enormous amount of CAPEX spent in the area. But if the geology is not there, it's going to be really difficult to maintain and even grow that output. And there are the other guys that say, no, economics doesn't matter, in the sense that higher prices will be the cure for higher prices.
Yeah, we are bullish on America's capacity to produce oil and gas at will, virtually. People who are concerned about declines in the Permian are usually part of a broader crowd of individual who is convinced that peak cheap oil is somewhere around the corner. We think that is a myth. And in a world where the Permian did slow its growth, or heaven forbid, flatten or even shrink, there's way more than enough oil all over the world to more than take up any slack that the Permian might give us. And I want to start with that because the uh, unspoken or sometimes overt association is once the Permian rolls over, we're out of luck, right? But that's just foolhardy and wrong. There's 3 to 5 million barrels of spare capacity in OPEC alone. Saudi Arabia would love to pump more at higher prices. Guyana's exploding in growth. You have probably between Guyana, Venezuela, and Argentina, you could get to 10 million barrels a day with those resources, with those resource bases quite easily. But even beyond all of that, I mean, the gating function of production in the Permian Basin is natural gas offtake capacity. So let's build enough pipelines to get all of the natural gas out of the Permian that is co-produced with the oil, and then see what the maximum run rate of oil production in the Permian really is. For this cadre of analysts, and they're not really analysts because they're seeking an outcome. We call them wish casters. They want the price of oil to go up, and so they're proactively looking for narrow bits of data that confirm their pre-existing bias. And so, if somebody reduces their capital expenditures and they get very excited by such things. Even on Substack's version of Twitter, which is called Notes, anytime I post something like the headline recently, Exxon plans to double its production in the Permian. Well, that includes, its acquisitions and blah, blah. Yes, get no piece of good news is accepted, and they're always finding the cloud in the silver lining. We don't spend much time worrying about well decline rates in the Permian or geology, frankly, at all. The peak cheap oil instinct is a giant short bet on human ingenuity, a sucker's trade if we've ever seen one.
And where does offshore development, particularly around is it the Gulf of Mexico, is the Gulf of America these days? Who knows? Where does offshore play into this thesis of being able to continue to increase production onto the world stage?
We've tied a hand and a half behind our back with Biden's recent executive order. And so again, talk to me about geology. We've just taken 95%, or continued to limit 95% of the US's offshore capacity from drilling altogether. You can't drill up and down the coast. You can't drill around Florida. You can drill in this one tiny little patch of the Gulf of America, which legally, I suppose I'm obliged to call it as a citizen of the US now. And so that's an example of politics, not geology, stunting potential. We note with interest China going ultra deep in its own offshore adventures. Interestingly, the further you drill, the more oil there seems to be. And we're not like getting worse at our ability to drill. It seems like we're getting better, i.e., this short bet on human ingenuity. You know, our model of the world is a giant ball of natural gas, some of which has been converted to oil, and there's plenty of it. Like we went in our own internal modeling, the resource base is infinite on a time horizon that matters, given any reasonable discount factor. And anybody who thinks otherwise is going to be wrong. But you know, we could be wrong. I mean, I certainly would be interested to understand how it is that we would be wrong. But we've seen no evidence. We have, if you draw a 50-year chart of global human primary energy consumption, it's an upward sloping line with a slight sinusoidal wave because the length of the capital cycle for the energy sector is slightly out of sync with the business cycle of the global economy. And so you go from crisis to glut and crisis to glut and crisis to glut. And people have this weird desire to draw tangent lines to sine waves. So when there's a glut, it's never going to get better. And when there's a short-term shortage, it's the end of the world. Nothing is easier to trade in life than fading a spike in energy prices because people think we're about to run out of it.
So is the bridge between the two ideas just simply the amount of capex needed to bring these available sources into the mix?
Not just that. So beyond capex, there's also the issue of technology, and again, which is often underestimated. But there's scores of thousands of brilliant scientists and engineers and AI computer scientists, for example, who are doing a dizzying array of work to make it possible that we can have all of this energy abundance. And you know, when we think about technology companies, we think about Apple and Google and Facebook and Nvidia, and they're certainly brilliant in their own regards. But the Exxons and the Saudi Aramcos of the world are technology powerhouses. All you have to do is visit an offshore drilling well or an LNG export terminal and see just the science and technology and innovation that goes into making this possible. And so it's not just CapEx. It's also keeping an eye on technology developments like new drilling and so on and productivity boosts that come with, you know, synergies of mergers when the technology of two companies come together and make something even better. And so this is always going on. The oil and gas companies are giant deflationary machines. And, you know, as measured in ounces of gold, oil has never been cheaper. In 2000, you could buy 10 barrels of oil with an ounce of gold, and now you could buy 40. And back to our discussion about, you know, US dollar debasement. Show me on the chart where depletion or peak oil is anywhere on the horizon. It just isn't. And just to leave you with one more number, if the US dollar hadn't debased from 2000, retail gasoline prices in the US would be about 40 cents a gallon, as opposed to $3 per gallon that we see today.
Yeah, that's certainly a fascinating stat with which to wrap it up. Thank you so much for joining us here today. Where can viewers find you to learn
Yeah, it
more?
was really fantastic. Thanks for having me, and looking forward to coming back anytime you invite us. All of our work can be found at doomberg.com, doomberg.com. We have our newsletter, then we have our pro tier, and all of our podcasts like this one are listed on a separate page. So everything is there. Just go to doomberg.com, and thanks again for having me. It was a real blast.
My pleasure. Thank you guys for tuning into the ROI channel. Stay safe, do your own due diligence, and I look forward to catching up with you in another episode shortly. Take care.